Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra. You're with us here on our special ongoing coverage of decoding the fine print of the Union Budget 2026. On this special edition, our clear focus is going to be to find out, has the budget taken any steps to make things less taxing for us? Yes, we are going to be discussing a lot about tax. Although the personal income tax by way of slabs has not been touched, there have been a lot of announcements that will impact the average investor, consumer and taxpayer at large. So let me welcome our special guests, our panel today. We have Mr. Ved Jain joining in, Senior Tax Advisor. Joining him also is Mr. Mukesh Butani, Managing Partner, BMR Legal. We also have on the panel with us Mr. Badri Narayanan, the Executive Partner of Lakshmikumaran Sridharan Attorneys. Warm welcome to all of you and thank you so much for taking the time out for this special conversation. Mr. Ved Jain, I'm going to be kick-starting this conversation with you by understanding, from an overarching standpoint, what has really stood out for you in budget of 2026?
Yes, see this budget 2020, the expectations were a lot, but as you said in the beginning, there is no change in the tax rate, etc., because major changes were effected in the last budget 2025, when the personal taxation was exempted up to rupees 12 lakh, the tax slab were restructured, and in this 2026 budget, a major expectation was a boost to the manufacturing sector, which we were expecting. And these expectations were a little higher. Looking to the economic survey, which was presented 3 days before in the parliament, and that where it was recognized that service sector itself is not going to help India and the GDP total roughly 50% plus, and we need to boost manufacturing. And we were expecting that the tax rate on new manufacturing facility being created in India will be reduced. So probably that has been missed out. But otherwise, I will say a lot of administrative changes which are going to make the life easier for the individual taxpayer, as well as, I will say, ease of doing business.
Okay. Mr. Butani, your verdict post the budget. We have had a long discussion pre-budget by talking about our expectations at large and wish list as well. How much of that was met? What was left as still a tall ask?
I think there is a lot in the budget. As Mr. Jain pointed out, which he labeled it as administrative charges. But for me, the overarching theme is that the finance minister and her team have ears on the ground to listen to what the taxpayer challenges are, whether that's got to do with the day-to-day challenges they experience at the tax office to just get a withholding certificate for remittance, or staggering the time limits for filing of the tax returns. But I think there are a couple of path-breaking changes that deserve a mention. Number one is the entire assessment process. So the assessment process and the penalty processes were running separately, as a result of which there was duplicity of effort as well as department's discretionary power that resulted in levy of penalties, which subsequently were reversed by the courts, because the courts do not confirm penalties in cases where there is a debatable question of law. The second is also the decriminalization of prosecution proceedings, and the decriminalization really is in three parts. One, there is a pruning down of the list. Two, certain forms of decriminalization have been approved as to be paid fine and moved on, just like you have in the SEBI law and in the Companies Act. More importantly, there's also some category of decriminalization where courts have been given the power to convert that into penalty. And I think that, in my view, is very, very reformative, because in the past 10 years, the list of, matters or technical breaches that landed in prosecution, at least under the framework of the law, kept on expanding, as a result of which there was fear psychosis amongst the taxpayers. So I think that, in my view, is the most reformative part of the changes, and many, many other changes which we can talk about.
Okay. Mr. Narayanan, let me come to you. If you have to describe this budget in one word, what would you say?
I think I would say this is a clean-up budget. I think it's not a transformative budget, let's be honest. I think the government had limited elbow room to do major changes, and there was no expectation, at least in a major way, from the industry. I think they wanted to control the fiscal deficit, and there have been a lot of reforms for the whole year. GST 2.0, there have been changes to, there's been talk about customs reformations, they've been talking about income tax act coming into new bill and new act coming from 2025, 2026. So I think my expectation was there, but I think they've done a good job of cleaning up and putting certain things in place. It reduces litigation. There have been some litigations where just on procedural basis, things have been elongating in the form of, thousands of cases being listed to Supreme Court on the basis of who's the assessing officer. That's been clarified. Some other amendments like that with respect to DRP's timeline. So I think there have been a lot of cleanup. So I would say this has been a broomstick budget, cleaning up a lot of the cobwebs, and I think hopefully setting a stage for more transformative budgets in the future to come.
Okay, a clean-up budget there. Mr. Ved Jain, coming to you on the point that Mr. Narayanan marked out, that, the Finance Minister has finally pulled the trigger on the new Income Tax Act coming into effect from April. She's promised to halve the number of sections and eliminate some of the complexities there. What is your sense, that once this will be implemented, how things will get easier, simplified when it comes to taxes? Also, what is the one thing that you were certain that this new Income Tax Act would have, but still not there?
See, this one of the first part which was very good, that Finance Minister stick to the stand that yes, this new Income Tax Act 2025 will be implemented from 1st April 2026. Now coming to the second point, how it is going to reduce the complexity and make life easier, I need to be fair that income tax law can never be simpler. It has to be a little complex, considering the fact that the taxpayer will like to make sure that the tax he pays is the minimum, and as against this, the tax administration will like to go widen the tax net or increase the collection the way it wants to be. So now there is a tug of war always between the taxpayer and the tax administration. And in order to address the various issues arising, you have to make the law very, very precise, clear, and also in that process, the law becomes complex. And as we see, this time I was expecting that the Income Tax Act, which was enacted, I think just 3-4 months back, and probably we will not have many amendments except a few corrections which may be there in this budget. But when I look at the finance bill, the number of clauses, more than 150 clauses to amend the new Income Tax Act of 2025, you can understand the complexity is going to create a gain in this Income Tax Act. That's a challenge which I think all fiscal legislation, particularly tax legislation, has. So in this budget also, so many amendments have been made which are retrospectively being done to take care of some situations, some administrative issues which have arisen because of the judgment delivered by the various courts. So there are number of judgments which have, number of amendments which are being given effect retrospectively. Again, there are many issues which are arising on assessment and reassessment. Those issues have been clarified in this. We hope that in going forward, probably this may ease of administering the law as well as compliance of the law.
Mr. Mukesh Butani, I'll come to you. When we were discussing pre-budget, we also touched base upon how the Indian equity markets and investors may be looking for some easing on the taxes on capital gains. As a surprise, the STT on F&O has been raised, something that has come out of the box. What exactly would you see this step as? Of course, the government representatives, the budget makers have been talking about, this step being taken to protect the retail investors at large. There are critics on the other side who are saying that, in a world where Indian derivatives market has perhaps become the largest, it is now becoming a new cash cow for the government, and they're looking to raise revenues via, increasing taxes here, maybe thinking of it as a new sin tax also, something equating it to a tobacco or to alcohol, and maybe thinking of it as a new vice and therefore wanting to put tax on it. How would you really, respond to that?
So remember, from a tax economic standpoint, sin tax is never a revenue mobilization measure for the government. It is to prevent an activity. And to some extent, the rationale given in yesterday's, budget media interactions by the finance minister and her team points out to more a regulatory issue, that they do not want non-serious players to be entering the options and futures market. And there is a background to it as well. Having said that, I think the timing is wrong. We shouldn't lose sight of the fact that $25 billion left from foreign portfolio investors just in calendar year 2025. So the timing is certainly wrong. The second aspect is what happens to small traders, because this is going to impact quite a few, businesses on the institution side. And the third important question that begs for an answer is that if this change and if this form of levy, as you correctly called the sin tax, has been motivated for reasons, then I think the regulators should take over. I don't think that tax incentives or disincentives can prevent people from consumption of those goods or services, as is evident from, cigarettes, tobacco, for example. It cannot do that. So are people going to be dissuaded because of this fractional increase in the taxation of the transactions? I don't think so. So I think this requires a little bit of deeper reflection. Certainly, it's an impact. It's a reaction by the lawmakers, and they've also spelled out the reason for this reaction. But it requires more reflection on part of the policymakers.
Let me come to some of the other aspects also. Mr. Narayanan, I'll come to you with regards to the TCS that has been cut, for overseas education, travel, medical expenses. LRS has been reduced as well. How would you look at these steps and, what would be the impact that we will see?
So these are all welcome steps. So reducing TCS. TCS is really a mechanism by which you track how the money is going out of India. And it's really not a tax collection or a tax receipt for the government, because it's just a pass-through. Having 5% I thought was always a very high number, because that blocks the working capital for the person for the purpose of being able to do these transactions. 2% is a good one. I think it would be nice to have it at 1%. But I think this is a good measure in this regard. There are lots of these kind of good amendments which have been brought in, I think, for making it a little bit more easier for the individuals to travel abroad and receive these services. And also, like what Mukesh had said earlier, revising returns, making it easier for staggering, encouraging more faceless assessments. I think all of these are welcome changes. I think these are all steps in the right direction.
Mr. Ved Jain, I'll come to you. Of course, personal income taxes, like you pointed out, not been touched in terms, and not was expected also. Nothing was expected to that effect, because just last year, massive changes were brought in. But with respect to the return filing, there have been some announcements. There is more time to revise ITRs now. The deadline has been extended to 12 months after the end of the tax year. There's also an announcement of a clear ITR filing deadline. July 31st stays for ITR 1 and 2. Non-audit taxpayers get time till August 31. There's also some announcement on the easier compliance for small taxpayers, automated system for lower or nil TDS certificates from 15GH that can be submitted via depositories. How would you look at all of these announcements?
All these are administrative reforms. Now coming to all your point one by one, so 31st July and 31st August is a staggering. Looking to the number of tax returns being filed on the last date of the filing return, the system was getting jammed, and that's why there were challenges always, people making complaint they are not able to file the returns. So now it has been staggered into two parts. Those who are not required to get the accounts audited, so they have been categorized into two categories. One, salaried employees who don't have a business income, and people who are having business income. So there are two dates have been worked it out. As regard the extension of the time for revising returns, so my view was always that earlier period of till 31st December was too short, And now, of course, it has been extended to 31st March with a penalty of rupees 5,000 rupees or extra fees with the 5,000 rupees, which is good. But because something can go wrong when you are filing the return, so a reasonably good time given to the taxpayer that in case something has happened wrong, he can revise the return voluntarily. That is good idea which is there. Now, as regard the other issue, which I think administratively they have tried to address on the 15G, 15H, these are very good, reforms. Now, instead of you filing the 15G, 15H with the tax officer, they say you file with your depository, and that depository will take care of it, and they will not deduct tax, and they will advise the company while giving dividend not to deduct tax at source also. Similarly, while getting a lower deduction certificate, it will be automated. Now you can just put in the details electronically, and then that process will be done. And in case your particulars do allow that you should get a lower deduction certificate, you will get a certificate. So this is a good move. I believe in the last 7-8 years, the income tax department has moved very fast in automation and trying to what we have faceless and low human interface. So that's a good idea, and it has helped the department also, and it has helped the taxpayer also. Now you can file the return sitting at your home, your return get processed. You, if in case your case is being scrutinized, you can submit your reply, you can get an assessment order, you can file an appeal, you can file your submission, everything is automated on that way. So that's a, I think, move which this budget, this 2026 is taking forward the reforms on that part. But as I said earlier, there are certain issues which have crept in. Now, I believe in this budget 2026 also, there are two proposals which I think may be a little bit regressive, not progressive. One, making retrospective amendment which creates uncertainty. And the second part is one amendment which is proposed that with the assessment order, you will get a penalty order as well. So, which will mean that in case there is any variation in the tax return, then penalty will automatically get levied and you will get a penalty order, and there will be a huge demand of tax as penalty, though you will be contesting both the addition in the income as well as penalty. But considering the fact that the success rate of in getting success in the addition or being made on merit being quite high, the penalty can always wait. Now, simultaneously levying the penalty will create a huge demand against the taxpayer, and there will be always be a challenge, and also a record will show how much outstanding areas of tax are there. This will also create a statistical problem for the tax department as well.
Okay. Let me come to Mr. Mukesh Butani again. I wanted to ask you, when it comes to the buybacks, they are being now taxed as capital gains this time. So could you explain that to us? How does life change for retail investors who participate in buybacks? What happens at the company's end? Do you think after this announcement there will be less buybacks there? Already dividends were being taxed, and now it's they're talking about buybacks as well. How will things change from here?
The buyback tax policy has seen back and forth in the last 10 years. The buyback, remember, was introduced as an amendment to the Companies Act, and then the tax regulations were mirroring the Companies Act provisions to provide a basis for taxing the buyback in the hands of the shareholder. The back and forth that has happened is because of the following. Is a buyback to be characterized as dividends, or is it a capital gain? We are now back and saying that it is a capital gain, which I think is the correct thing to do, because depending on the characterization, the burden of tax was also imposed. Because if it is dividends, then under the erstwhile law, a dividend distribution tax was applicable. And if it is capital gains, the liability was on the shareholder. Now, there were other challenges as well when multinationals were doing buyback, because the question was that whether for characterizing this buyback income in the home country under the double tax treaty, whether it's dividend or capital gains, because India was classifying this as dividends, or till March 31 this year, it will still be dividends. So now that rationalization has happened. The government is saying it is now buyback, which has to be characterized as capital gain. except they have come out with a differential rate to disincentivize a promoter, because a promoter may be tempted to have a buyback to benefit itself. So the promoter now has to pay tax at the ordinary rate. So for example, if the promoter is an individual, it pays tax at 30%, and if it's a corporate, it pays tax at 22%. Whereas non-promoters will pay tax as long-term capital gains on the assumption that you can do buyback only of shares after a while, so it's a long-term capital asset. So I think that this move is not just a rationalization move, it lends clarity, it lends predictability, and more importantly, buyback tax was considered as like an anti-avoidance tax. It was classified as an additional income tax under the law. Now they are saying no, you can do buyback provided you fall within the four corners of law from a Companies Act standpoint, and it is dividend income insofar as the shareholders is concerned.
There have also been some announcements with regards to the sovereign gold bonds. Viewers, although you do know that the RBI has stopped, announcing the sovereign gold bonds for you to purchase directly from the RBI some time ago, but these rules have been clarified for all those, investors who are trading in sovereign gold bonds in the secondary market. There is some change. The capital gains exemption is only for investors who bought sovereign gold bonds from the RBI and will be holding up until maturity. So I wanted to understand on that aspect. Mr. Jain, I'll come to you on that. Would you be able to help us understand for gold investors already at this point in time, there's so much of FOMO, everybody had been investing big in gold and silver. How do things change?
In 2015, the government came out with this idea of sovereign gold bonds. The objective was that people do have an inclination to buy gold. The government thought fit to let people not buy the gold. They should subscribe to the sovereign gold bond, and whatever the money they are putting in, the equivalent amount of gold will be bought. And then at the time of redemption, equivalent amount of gold will be available to them, and plus some interest every year. And then the government promised that at the time of redemption, whatever the amount you are getting, that will be a capital gain, that will be exempt in the hands. Now, looking to the way the situation has developed over a period, or from 2015, the rate of gold has gone up from, I believe at that time, 7,000-8,000 rupees, 10,000 rupees to now, it is mind-boggling the rate going on. And looking to the situation that the liability the government has incurred, because the government has to redeem these gold bonds at the present rate, there is a change in the thought process, I believe. And that's why now the restriction is being placed that this exemption from tax will be available only to that person who is the original subscriber, who has purchased from the RBI and who gets it redeemed. That means all along it should have been with you right from the date when these were issued till the time of redemption. Earlier, this was not the conditions. And that's why I say it brings a little uncertainty in the tax law, because having made a commitment, what we call a rule of estoppel should apply, that you cannot go back on your promise. You said that as and when these get redeemed, this will be tax exempt. Now you say no, in case you were primary subscriber and then you get it redeemed, then only it will be exempt. This is the amendment which has been proposed now.
Correct. Probably the government will be able to issue any clarity on that maybe in future, but right now it is contradictory to its own initial thought process with regards to SGBs. Mr. Narayanan, with regards to the 6-month foreign asset disclosure window, this, how would you look at this announcement for, say, tech professionals, for students, for businessmen at this point in time who are listening to you, and what would this mean? Assets below a certain threshold without penalties, and over that, if you could clarify that, sir.
Okay, so the thought process is that there is a lot of, without any fault, a lot of money which has been earned outside India, which has not been disclosed in the returns filed by students, medical professionals, or individual professionals who have been outside India. As you know, in the past, we've had a lot of issues with respect to penalties, prosecutions, and even issues with respect to disclosures of foreign assets outside India. I think both Mr. Ved Jain and Mukesh ji know that, in the Panama Papers and other papers which followed, and also the HSBC disclosures, and the Black Money Act, and so many other things coming into picture. There's a lot of pressure with respect to this. I personally feel that the Black Money Act is quite draconian in its application, and therefore there was a continued non-disclosure of foreign assets which have been earned by people outside India who are not disclosing this within India. And in effect, they were continuing to be under this radar of whether they're going to be there. Many times when there are any assessments happening or whether they were having to disclose any further information, there's always this issue of whether there will be penalty and prosecution. I think the government has come with a welcome change of kind of opening up the people for the purpose of being able to disclose these amounts. There are some thresholds have been prescribed with respect to what the amounts are. Thought process being that income earned outside India, which are reasonable, okay, but because for whatever reason you have not disclosed it in India, you can go ahead and disclose this. So this is a good measure. I do not know how much people will kind of take into it, because generally what I find is that in my previous experience, while in income tax there might be an exemption, we have found, for example, ED coming and investigating this. We've had CBI in some cases investigate this. There have also been other instances of other laws which might be triggered. So I think we'll have to see how people will react to it. Generally, people are a little bit worried. Unless there is a wholesome immunity which is provided, I think it might be a little bit of a challenge. But all in good state and in a good manner for people to be able to prosecute on this.
Okay. Last couple of minutes on the show. Mr. Mukesh Butani, coming to you. The Finance Minister has also announced tax holiday up until 2047 for foreign companies providing cloud services through India-based data centers. How would you see this incentive? Is it one of the boldest that we've seen? Will it now truly make India the data capital of the world? And, will it finally bring all the FDI money that we have been looking forward to with, coveted eye? How would you look at it?
Firstly, you must understand that India's tryst with data centers started in 2020, and a policy that was supposed to be announced in 2021 could not be because of COVID disruption. But last 1 year, you have seen tremendous interest despite the fallout of the India-US trade deal and the tariff-related stress between the two countries, that US businesses want to go out and look at India as a credible data center destination. Currently, 70% of world's data processing, which is expanding at an exponential pace, is processed in developed countries, and India is the most credible option outside of the developed countries. Firstly, this is not a tax holiday. It's a tax carve-out. So the Indian data center will pay taxes. It is the foreign company that is availing the service of the Indian data center. The tax carve-outs has been for them because the domestic law today could tax such foreign companies under the nexus rules. And it is also unclear where will India and where will the world land on the bilateral negotiations for taxation of digital economy. So what India has done, it's a masterstroke by India. India has said, while the multilateral debate continues, we don't know where the world will end. From a domestic law perspective, we are giving absolute clean sheet clarity to non-residents by way of a carve-out that if they avail of data services center in India, then up to 2047, a 20-year period, there would be no adverse taxation. So this is, in my view, one of the boldest moves I've seen in the history of tax laws in India.
Okay. Mr. Ved Jain, I also wanted to ask you on the basic customs duty, the overhaul that we have seen this time. Will it finally help start the export growth that we've been looking forward to? Have the announcements come in as per expectations or maybe even beyond?
Before I answer this question, I will just add to one other earlier question.
Okay.
The Black Money Amnesty Scheme.
Sure.
I may just add this scheme is available only to the pending assessments and where issues have not reached the appellate stage. So I believe this Black Money Act was enacted 10 years back almost. and now there are many cases which have reached the appellate stage, and this scheme is available to bona fide defaulters, in the sense that students, professionals, etc., who have gone abroad or who have money and who by mistake have not declared that up to rupees 1 crore, that's the idea which is there. So there is no reason why this benefit should not be granted or immunity should not be extended, and person should not be allowed to avail the benefit of this, where even assessment has been completed and those appeal matters are pending in appeal. This will reduce litigation, and this will complete, I think, give a peace to all those people who have been caught wrong because maybe of ignorance or maybe some misgivings at their end on that. Now, coming to the issue of the custom duty, I believe the finance minister made a lot of announcement on the custom duty aspect, and she kept in mind that India's need to make India a hub where India can use this hub as a potential for export. You will see she made a lot of announcement regarding giving concession in not only in custom duty, also in respect of some transfer pricing issue which probably would have arisen about the machinery, tooling being supplied by the outside MNCs in and getting manufactured in India. So a lot of concession has been announced in the budget on the custom duty aspect in order to ensure that India really becomes a manufacturing hub, and also in ensuring that India's export increases. But of course, there are challenges as on date. As you see, the America's tariff issue is still hanging. How India is going to address that issue, our FTA, which is going to be negotiated, but I don't know where we are as and when this situation will get neutralized. But yesterday budget on custom duty, she has taken care that in what India needs to make it really a manufacturing hub, she has given a lot of concession on that part.
All right, the time's up. This discussion could have gone on. Thank you so much, Mr. Ved Jain. Thank you so much, Mr. Mukesh Butani and Mr. Narayanan, for sharing your wonderful insights with all our viewers. Of course, we can do a part 2 and decode some more announcements by the Finance Minister. Thank you so much for your time on our show.
Thank you for inviting me.
All right, viewers, we'll wrap it up on that note. I hope that this has definitely helped all of you make the most of what kind of announcements have come in by way of taxation. Yes, your individual tax brackets may not have been touched, but there are a slew of announcements that as an investor you must definitely be aware of. Most of the clarity has come in with tax experts decoding that for you. Stay tuned on to Business Today Television. We will continue our conversation with top market experts, economists, policy makers and experts round the clock to help you understand and decode the most of the budget announcements that have been made. Thank you so much for watching this one.
A budget prepared in the shadow of global headwinds, triggered by the tariff war unleashed by Donald Trump. Nirmala Sitharaman presenting her